Hello and welcome to another update video about FETCH.AI FET. We start on the daily time frame and we can see that this is considered a larger ABC structure. Okay, so that means that we are very close to a top in my opinion. And of course, you know, it could still rally substantially in wave 5 of C, but most of this entire rally on this chart's history is likely done. The main element of the rally is likely done. We consider the initial rally as a three-wave move into the March 2021 highs, then a three-wave move down in a B-wave expanded flat correction, which bottomed in November 22, and now as a C-wave up, which seems to be an ending diagonal pattern. And the C-wave is a five-wave move. We have a wave 1, wave 2, wave 3, now maybe another 4, 5. You won't see that very well here, but the idea is wave 4, wave 5. The problem is the third wave wasn't really long enough. It only reached the 1.236 Fibonacci extension of the initial 1-2 setup. That is a bit of a problem. Normally, the third wave should reach at least the 138% extension. So the fact it didn't do that is somewhat problematic. It's not invalid, okay? I always say that the bare minimum a third wave needs to do is the 1.236. Yeah, it's reached, happy days, but the problem is the third is too short to be reliable, basically. And the fourth is already very deep. So we already had to increase the wave degree, didn't we? So we had to do that. And that means the main support area for the fourth wave, I will zoom in a minute, but the fourth wave support area is defined between 52 cents and $1.07. We haven't touched it yet. Therefore, it's quite likely that this correction extends a little bit more. But what I want to share with you is just the problem that this third is a little bit short, which means that this entire structure is questionable. And it means that if there is a break below 52 cents, I will assume this has failed. Okay, this has failed. This was a three-wave top and we have completed the bull market. This would have to be the assumption below 52 cents. Still plenty of space, but also at the same time, there is currently no confirmation of a low in place. It is, however, quite reasonable to watch for a corrective rally, maybe already the fifth wave, but we need more evidence for that. And also, if you consider the length and depth of this wave 2, this wave 4 isn't really long enough yet to be a reliable fourth wave. So it all takes a little bit more work here. This chart has become a bit of a mess, and it definitely is not a high quality chart. Okay, very, very important. Let's go to the 4-hour chart. The quality of the chart reduced when the price failed to rally to the 1.38 extension. All right, it is so far a three-wave pullback, and you could say we kind of reacted here to that 38.2 retracement, but didn't quite get there. I think, as I said, because of the reasons I just mentioned to you, it is possible this fourth wave extends. So there's one possibility where we say this is an A wave, we get a high B wave and then a C wave down. Be aware of that. Or if the wave 4 is already bottomed here, then we should see a rally straight away. Now, in both of these scenarios, we might have formed a local low here and we could go higher directly. But that remains that the condition is that we're holding above the $1.17 level, which is support. So I'm going to zoom in a minute. The bottom line is, as long as 52 cents is holding, it is possible that we go higher in wave 5. Whether this is going to be an extended fourth wave, or if the wave 4 finishes here very soon in this region, will remain, will have to be seen. But at the moment, there is no clear bottoming confirmation. Okay, that's very important. So this is we still need to be on the side of caution, absolutely. And I can tell you this is not a great chart for short-term trading. I don't see it like that, unless you have an additional edge or something, but this is a mess. And yeah, be aware, be on the side of caution here. The support level is clear, okay? And I think it can be reasonable to maybe scale in a bit. And then when there is a rally to take some off, I think that might be reasonable. The potential here is for a high B wave. So let's assume yellow count. Let's assume wave A bottomed. or let's assume just a low has formed, right? A low has formed here on the 18th of June, 17th of June. The condition for further rising prices in whatever wave count it is it's holding $1.17, because that's the 78.6 retracement of this rally. So any break below it will favor more direct downside, and that we test the lower orange support zone. So it all hinges on the $1.17 level. If that's holding, it is reasonable to watch for a C wave to the upside. Okay, and then we have a large ABC structure. This could be a larger A, and we get a larger B and a larger C. This is going to be a pivot. So we have a support area here. The price could possibly find support here. No indication it's done that. But if it starts the C wave from here, and there is no indication it's done that, but if it does, then this is going to be the next pivot to watch between $2.10 and $2.49. I suggest we wait to see how the market reacts to that pivot. Let's first see if support can hold here, and then we can talk about the further developments. But there is a potential for a high B wave to form. But at the first pivot here, this could already fail here, right? It's all corrective price action. It's all corrective price action. I could simply take the micro count off and tell you, okay, this is the support zone and everything here is noise, because B waves are noise. So be aware, I warned a few times in previous videos that trading a B wave can be extremely risky unless you zoom out and take a look at the bigger picture, see it all as a large range, because that's all it is, and then just be careful here, right? There is no impulse to the upside from the low, no clear impulse, so I cannot confirm a low in place, but I still give you a support zone to watch, because the market could find some temporary support here in the area between $1.17 and $1.28. No, there is no must to get there. The price doesn't have to touch this area. It's just the lowest two levels, basically. This is not a target, this is simply support. So what we are watching for is if the price can form a first, let's say, 1-2 setup in wave C. The C wave here is a 5-wave move. So it takes 5 waves. Obviously, the first 1-2 setup, if clear, could provide a micro setup to trade the C wave. The problem is the way this chart moves is sometimes without clear subdivisions, as you can see here when looking at the A wave. So it really is a bit of a mess. How you trade this is, of course, up to you if you want to trade this at all. I mean, this has become a bit of a mess, right? So I wouldn't really trade this aggressively. It doesn't really give any clear setups at the moment, I'd say. I think if we get deep into this larger orange support region, there's a really good reward to risk ratio. And in all other cases, I would just zoom out and, the range could be a start, trading the range without trying to trade the micro count until things get clearer. That's the update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.